Okay, so we got some people here. Once again, impromptu webinar. Like to try and do these things. We got lots of people learning. Want to make people learn stuff. It's good to always talk when the markets are sort of slow. This is a slow time in the market. If you're trading right now, I feel sorry for you because really you shouldn't be trading right now. But what I want to do is I want to go through some things in terms of visualizing what the market's doing and understanding why it's doing. I still think there's a lot of confusion into where you draw zones, why you're drawing zones, what do zones mean? Are they support and resistance? Are they, do they always return? What's momentum? I don't know how this works. Like a whole lot of shit. So what we're going to do is we're going to go through some ideas. So what I'm going to do is I'm going to go once again and I'm going to talk about sort of each chart and visually what's going on in the charts and ideas of why things are happening the way they're happening in terms of how to understand and better diagnose what's going on in the markets. Now, once again, this is NFP week, so it's very, very difficult to trade in general. So I suspect if you are profiting this week, you are doing okay. If you're not profiting this week, I wouldn't really be too concerned about it because NFP week is usually very difficult. If you notice, my trades have been very sporadic. I lost trades yesterday in my trading journal. I did win some afterwards in the end, and this morning I only took one trade really, which was just to go through and discuss how to do a pending order effectively. For the most part, this week is very light for me. I'm not looking to make any big gains. I'll take what the market gives me, but I'm also not sticking around in the market a lot. For the simple reason is there's just too much confusion right now in the market in terms of what's going on. I mean, a perfect example is, I mean, if you look today at sort of the news, essentially from 4:30 all the way, like even now 3:15, like this to me is just a whole shitload of news. It's just way too much to try and digest and say, hey, I'm going to be able to get profitable positions. Excuse me, you really got to be focused on where is the best opportunity to make the best amount of money or be the most profitable. And sometimes no position is a position. And what I mean is if you can't see a trade, then probably there isn't a trade. So I don't know why you would try and feel that compelled that you need to trade today if you see, like this whole shitload of information. Like, look at this, a red folder, red folder, red folder, red folder. So this to you, and I mean even here, this automatically to me, in terms of trading, means banks are going to be sitting. The banks aren't going to be moving anything until we get to, this person here, until we get the meat and potatoes of what's going on. And really you have to be aware of that stuff and you have to use judgment. So when I'm saying visualizing the charts, this is what I mean by visualizing is, if you look on a day and you see that there's high impact news on Forex Factory and it's all related to this, maybe today's a day off. Maybe we just turn around and say, hey, not trading today. And it's the reason why I only took one position. You really have to, figure out exactly why you're doing what you're doing and how you're doing what you're doing. People telling me they don't have audio, picture, sound, cats, dogs, food, they don't have any of that stuff. That is all on your end, not on my end. I have a T1 dedicated line to my computer from my internet provider. I do not want to have my internet ever go down, so it's all on your end. Sorry. It's never going to be on me. And what you need to realize is check your internet connection, check everything. This is recorded. You'll have access to it afterwards. So it's never going to be me. It's never going to be my internet, my connection. It'll always be someone else's. And I will caveat that by saying that's the reason is because I pay for decent internet, because if you're making a living, you have to understand that this is, very important that you have good internet. Okay, so let's drop down and let's talk about today's action. Okay, so let's talk about this exactly. And we'll go through this very straightforward, and we'll talk about all this information. But first, I want to go through and let's exactly dissect what's going on today in the markets. Okay, so once again, we're looking at USD JPY daily. And similar to what I had said earlier this week, this is sort of your key information, okay? And what I mean by this is 113 is a pivotal point of rejection right now. Doesn't mean necessarily that we're going to go blow past 113 in the next few weeks. Maybe we do, but you have to be cognizant, and this is where visualization comes in. You have to be cognizant that when we get to this area up here, that we could have a reversal. Okay, so you have to be aware of that, and you have to look at your charts, and you have to understand where there are key points of resistance. Because once again, when we look at the charts and we go, and we zoom out, you can see the multiple times that we've come into this area and we haven't really blown by it. The last time we blew by it and we're up in this region over here is like last year. So you have to be cognizant of that. And if you look over here, last time we did it was April. So it's been, and this is June. So if you figure that out, if you say, okay, April, June, what's that, like 3 months or 2 months? So you have July, August, September, October now. So maybe we're going to go into that level afterwards. But right now, there's nothing to tell me that we're breaking that level. And I think you as a trader have to anticipate that. And you actually have to understand that, you know what, there's a reason why 113 is a pivotal point. You can see clearly on the charts on USD JPY, 1, 2, 3, 4, and I would consider this 5. You have 5 touches here where, you know what, we came close to breaking this resistance level, but we just tapped it. So if you wanted to say this is essentially a resistance or a zone, you could say that with accuracy and say, hey, for the most part, and this is where we talk about zones, if we're going to draw out a zone and we're going to say this is a zone over here, this is a zone, we're going to tap this level and more than likely start to move that direction. Similar to here, we have a huge rejection point and we fly back up that way, okay? So you have to understand the market moves in waves. It's always going to go up and down. We're never going to have just continuation of up. There always has to be an up and then a down and an up, or once again a further down. So you as a trader have to understand that. And now the next question is, Ted, well, how do I know when it's going to go up or when it's going to go down? You have to understand that when you look at this, you have to determine where you're trading and what session you're trading in. So if we drop down into the hour charts, we can clearly see here right now we're coming in closing the we're closing in the 1 hour or the 1 p.m. So this is a new candle, new 4-hour candle, right? So this 1 p.m. is a new 4-hour candle, but here you have 12, 11, 10, 9, 8, 7. Okay, here is your new 8 o'clock USA. Oh shit, let me do this again. This is USA open. So this is your 8 a.m. candle right here, okay? Now look, this is major, what I would consider, your support and resistance area. Once again, if we drop out and we go through a little bit, if I zoom out a bit, you can clearly see here we tapped, but we broke what we consider, it was a previous support level. Now it's a resistance level. We broke it again. But once again, you can clearly see when we tap it, we have to be aware of what's going on to the left. And once again, looking here, this is our 8 o'clock a.m. candle. So this is our breakout candle for the New York session. You can see, looking left, we have this set of candles over here. We have this set of candles over here. So the idea is, once again, looking where there can be issues. You can see here, right here, we have this wick matching up with this level here. So if you're aware of these levels and you can see that we're going up here, there's nothing for this candle to stop when you start to look across and you start to see where we're going. As we go a little bit further higher now, or further up, you can basically see now what's happening in this level here. One, volume is down. Okay, so we're not going to have much movement anymore. You can see at this point when we look over here, this seems to be a level, a zone, right? Because what's happened here? If we look closely at this level here, sorry, give me a second. you can see there was basically, when you draw it all the way across, you can see how much of that it encompasses. So this would all be a zone, okay? So you're right now in the middle of a zone, and you're in the middle of low volume. So what does that possibly mean? That we may consolidate in here before going further up or breaking back down into this level. Here is not enough information to say that we have any trades. So a lot of people will still look at the trades right now in the afternoon and look at these candles and say, hey, okay, now we're going down. But there's nothing to say that, because if you look closely at what I'm seeing right now, and this is live, what I'm looking at is, as we start to zoom in a bit more, look at what's happening with these candles, right? So you have a little bit of movement here. More than likely, we'll probably potentially push to this level, but you can see how the candle at the top is almost at the same point, right? This pushed up, this was your little top, right? And then we started to push down, but we wicked up over to this level, and it matches up as you go across over to this level. Sorry, my line isn't straight, but you sort of understand what I'm talking about. This wick over here matches this over here. So you always have to be aware of what's happening in the market. As soon as you see this tap and this pull, you could potentially say, okay, you know what, we've hit what we consider a resistance level at that point. We have to pull down. Now, it depends on what frame you're working on, will be how we're going to trade. And when you look at all this stuff, when you look all the way through and you say, okay, what makes sense and what doesn't make sense, this is what you're looking for. And this applies on any time frame, because once again, we're in the hour. Drop into the 15-minute charts. You can see in the 15-minute charts now, if we go into where we had 7 a.m. So once again, 14 GMT is my 7 a.m. Here's where you have basically your USA open. Okay, this is USA. So all this right now is USA. You can clearly see the multiple opportunities you have to trade, but more importantly, you need to start looking left to see where there could be possible issues, right? You can see here, there's what people call a double top or whatever that's called. You can see where we might have trouble, but more importantly, you can see that this is a resistance level. So if you were trading this morning, which you should be if you're trading the US session, you could easily put your take profit at this point over here, and more than likely you're safe, because what are you doing? You're basically saying, okay, I'm going to start trading at 8 a.m. I'm going to take a buy, because now I have, this is a wick fill, right? We're starting to change momentum. I'll wait till we get to 8:30, fine. I'll wait till we get to the new 4-hour candle, which is 9 a.m., and I'll take a buy. Okay, so once again, you're at 7 pips. So maybe, you know what, I'm gonna continue through. There you go. You can go further up. Now I've got, 300 pips. Okay. Give me 1 second. Let me pause this. I have people at my door. Sorry about that. It was a package for me, a present. Anyways, as I was saying, so as you start to go through and you start to look, we can start to see some more items that are, some more ideas that are going to be happening potentially for the Asian session. So if we look here, we can see that that wick was filled, right? We had momentum, we filled that wick, but more importantly, when you look at the time that that wick got filled. So the key here is understanding where you have the most momentum. As we start to finish the morning, so 19 GMT, as we start to finish the morning, you can see at about 11 o'clock, that was our final push, right? So from 7 a.m. or 8 a.m. to 11, you had opportunity all the way through to get 50 pips if you took the whole range. But more importantly, that's the most volume that you have throughout the entire morning. You can see now everything starts to scale back and we start to slow down again. So my question begins is, okay, how would we have known that all this was going to happen? You keep dropping into time frames, and as you start to look, you can start to see where we have consolidations. Okay, so here's a consolidation point. You can say here is a consolidation point. These are things you have to start identifying as a trader in the smaller time frames to figure out what makes sense for you. So if you were over here and you were saying, okay, Ted, I don't know where the market is going at this point. So if we turn around, give me a second. If we do this, if I do this and I say, Ted, I don't know what is happening over here. It's a lot of consolidation, okay? I don't know what's happening. What do we do? We're at 9:50 in the morning, 9 a.m. in the morning. So these are all these candles. Sell stop, buy stop. You're above consolidation. You're above what is called the box, right? I think you guys have heard this before. This is your box. This is what you're doing. You're putting yourself in that position and you're saying, okay, fine. If I take a buy stop at this point over this level, more than likely if we break out, what should happen? And as we go through, you can clearly see when you break out, we pushed up through that, and that was basically the 10 a.m. hour. Okay, but once again, if you would turn around and say, hey, what makes sense, what doesn't make sense, the question becomes, where is momentum, where are you in your session, where is the majority of the major time frame going, and what does our longer bias look like at this point, and where could be trouble spots? Those are questions that you have to be asking yourself as you're trading. So there's a question here, would you prefer to catch the initial move rather than getting in on the retest? Well, I mean, it's not necessarily a retest versus initial move. It's what makes sense at the time that you're trading. Okay, so here's some confluences, right? This is a NYSE open, right? So NYSE open. Okay. So all this is around the NYSE open. You have the new 10 a.m. candle, right? So there's probably a news event that pushed it a little bit higher, but more importantly, momentum was on our side. We were still going up. There's no reason that we shouldn't be. And here's the kicker. If I put my position over here, and I put my position over here, right? Because essentially this is what we're considering, you know, our trap line, or, you know, because it's either our support line if we're looking at it from this side over here, or it's our resistance line if we're looking at it from this side over here. So you're in a position where you can probably either push all the way, break through that, or push all the way down. Now, when you're going through and you dig a little bit deeper, and this is why I say you use multiple time frames, when we start digging a little bit deeper and we start going through multiple time frames, now you can start to see where things make even more sense from a standpoint. Because now look at the 1 minute charts, look at all your consolidation. Look at all your consolidation. Okay, so now suddenly you start to see, if you start examining the charts a little bit more, you can start to pinpoint with even more accuracy to say, hey, if I take a buy stop, excuse me, over here, or if I take a buy stop over here, we're going to push further up. Now, what becomes your stop losses? Okay, so that's the next question, is people will say, well, where do I put my stops? Look carefully. Here you go. So my stop loss would probably be over here, right? Because if we're going to hit this point, more than likely we're going to break. Up over here, where's my stop loss going to be? Probably right over here, right? So if I draw all the way across, that's where my stop loss would be. So you're at 61, you're 54, basically 5 pips, right? Here you go from 61, and you've gone up to basically 71, right? So even if you didn't take the whole move, or you took it over here, you're at 81. So you're essentially going up, you know, I would say, what, 10 pips? Okay, so you're putting yourself in a position to win, but more importantly, you have to really focus in on your times that you're trading. This is your key right here. This is the key information, is your times, your session times. Understand that information, because a lot of people are still failing at that. You're still trying to trade at times that do not make sense. You have to buckle in and dial in your trading. I can't stress this enough. You're not trading at 3 o'clock in the afternoon. You're trading between 7 a.m. and 11 a.m. Eastern time if you're catching the USA session. You're not trading now. This should be a dead time. This should be your demo time, your journal time, every other time, or setting yourself up for Asia. You should not be trying to get trades now, nor should you be trying to take trades at 11 o'clock. So if we look further over and you turn around and you look at, once again, if we go through and we go a little bit closer, if we go through the hourly charts, you can clearly see here at this point, we're not taking trades here, because look how slow the market's moving. This is real-time movement. The market's moving slow, but there's really no movement. There's nothing that's going on here. So why are you putting yourself in that position? Really focus in on taking trades that are quality and in the session that you're supposed to be working through. And if you're not doing that, you're failing yourself, because essentially what you're doing is you're taking high risk. You're taking high probability chances. You can see here, 1, 2, 3, 4 hours. You had 4 hours to trade this morning. Between 9 and 1 p.m., you had 4 hours to trade. You should have been in that moment trying to do that. Sorry, so this was 8, 9, 10, 11. So these were your 8 to 11 candles right here, the 8 a.m. to 11 a.m. candles. You can see lots of strong movement. You don't have this wick stuff. You don't have these small little candles and this confusion that you had here. You have strong defined movement. That's what you have to do as a trader, and that's what you have to wait for. And if you're going into the smaller time frames, once again, if we go into the 15-minute time frames and we look, you can clearly see where the strong moves were. Okay, we can clearly take a look and see here, there's no strong move, no strong move. Here's your strong move, right? You got strong moves. So 8:15, 8:30, 8:45 we taper off, because why? We're coming in close to the 4-hour candle, the new 4-hour candle. So what do we get? We get a pullback for the new 4-hour candle to create a wick. The wick gets filled at 9 o'clock. 9:15 we get consolidation, because why? The New York Stock Exchange is opening. So we get pull, 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 and then we get pull up, more than likely consolidation. News event pushes us up. We tap a zone, pull all the way back. Why? Look left. You can see clearly here we tapped what would be almost a resistance level. If you were looking closely at the 15-minute candles, you can see all the way across as you start to go through how much trouble it had pushing through in the last, say, day or so. So as you start to go across, hey, we've tapped this level. More than likely, we're going to pull back a bit before we go a little bit higher to tap this level. And you can see how each of these levels sort of line up with the previous point. So more than likely, if we look at what we're doing and we say, okay, we're going to have more momentum up, we've tapped this level, what would be our next level we'd be looking to tap? Probably over here, right? Or even over here. Sorry, let me do that again. So you're looking at this level across over here potentially, because we see wicks to the left. We see price zones over here that we're looking at, and final level probably up over here. But once again, that is near major resistance. So do we want to go that high? Not really, not likely, but if we are that high, more than likely you're in profit, so you set your stops above break even, let the trade run and see where it goes. But when we get to this level here, you can see on my screen, maybe we're not moving past that point, but if we have momentum, where should we be aiming? We should have targets where there are price zones, right? So you can see here, this is a price zone, because at the bottom point here, this bottom tap that right there. You can see with the crosshairs, I'm pointing at a price zone, and as I look right to where we have our current candles, we're tapped that zone. We've tapped it one, 2, 3 times. So if we start to move back up with bullish momentum, more than likely we're going to come back here again. But we don't know when that's going to happen. All we can do is sit back and wait. Once we get to this level, we start to plan the next levels that we want to get to. That's what you're doing as as a trader, you're anticipating where we can go. I'm looking right now, just like everybody else, and I'm saying, hey, okay, we tapped this level. That looks interesting. Okay, great. So I'm looking at potentially this level over here, maybe this level over here, but I'm aware of those levels. So as we start to move further up, as we get to over here, where are we going? We're going over into this point over here, probably over here. Our high point may be over here. So, you know, you can start to identify where you need to be and where you're going to be going. Not everything here is a zone. Don't get confused. You know, maybe you turn around on the 15-minute charts and you draw out, you know, what you consider resistance here, and you say, okay, this is where my target is, 113.12. So I'm looking at that as my target. But I also understand at this point that this is my target, that I could possibly have issues up over in this area because there's a lot of price tapping. I could have issues over in this area because there's price tapping. We're looking left to give us information. This is going to give us issues because we already tapped it and pulled back down. So as we go back up here, this is going to give us issues again going further up. As you start to look through the higher time frames, you will start to see less of these issues because there are less candles. But when you drop into the shorter time frames, for most of you that are scalping or taking small trades, this is the kind of information you need to start arming yourself with so that you're successful with your exits, but more importantly, you're successful entering, because you don't want to put yourself in a position where you entered over here and now you're in a huge drawdown waiting for it to come back, right? You have to recognize, looking left, there could possibly be a resistance issue. More than likely, if you entered over here and it pulls back down, you're still in profit, so you know that you're okay. So this is for people that are re-entering a trade or entering a new trade. People that are already in the trade, you know that probably this is our target, 113.12. We know that's probably a good target. We're in a trade over here in profit, fine. Run it up to where you need to be, lock in your break-even points or your take profit points, and let it continue. That is sort of your key, is mapping out and visualizing where you believe the market is going based on what you see in front of you. All right. So I remember you told me one time at noon in the chat room, why are we trading at noon and never again? There you go, it cuts your losses. Correct, so now you're starting to realize how much timing makes sense. Recently tapped several times means weaker zone, or we don't know. It doesn't mean weaker zone, it's just momentum that we're looking at, and you know, you're tapping these price areas, but once again, when we look into our bigger price zones, you can see as an example right now on the 4 hour, we've pulled back, we've tapped, and we look left. So if we're in momentum, if we consider this momentum now, if we're going up and this candle's forming, more than likely this momentum should fill this wick, right? We should fill this area, and as we go further up, you can start to see where we're starting to have issues on the 4 hour candle. But this entire movement is going to take a while, right? Because you have multiple hour candles, multiple 15-minute candles, so you have to understand that this move might not happen right away. And like I said this morning when I gave everyone my charts, that you know what, if we tap this area, if we go up, we're going to tap this area. If we come back down, this is the area we're going to tap, because you can clearly see it tapped in and rejected. So if we have this and we start pulling down, this is going to be my target. So if this continues this way, I'm targeting right here, because you can clearly see we have a price zone. We have a price zone that there's been multiple taps into, but I'm not looking to tap this far deep into the price zone. I'm not looking to get to this level. I'm looking to tap relatively close and then getting out. That's what you have to remember as a trader, is you don't want to try and guess how far this is going to move. Your initial prediction is, if we're moving down, we're going to tap this area. We know that more than likely, right? Because you can see all the various taps right now on the 4 hour. You can see where we've tapped. I don't know if we're going to go to here, if we're going to go to here, or if we're going to go to here or back down to here. But I know we're going to go into this zone over here, for example, this level here. I know we're going to be here. So you as a trader have to make a judgment call. You have to say, I'm conservative, I'm going to exit here. I'm a little bit more aggressive, I think we can get to here. I'm ultra aggressive, I think we're going to go right into here because now we have momentum. Okay? So this is what you have to do as a trader. You have to map this out. You have to map this information out and say, which way are we going? if we're unsure. But if we're going this direction, what are we looking for? If we're going this direction, what are we looking for? Those are your key indications and ideas for your trading. You have to be able to map that out for yourself and say, hey, what makes the most sense at this time? Saying that this is a pebble rock, this is Scooby-Doo formation, this is, you know, a Buzz Lightyear, that shit doesn't matter to you. It's not going to help you. It's going to give you information, but at the same time, all I want to know is, are we going down? Are we going up? Are we going down? Are we going up? Like, what is happening, and where are our key levels that I have to be aware of? This is what you need to do as a trader. You need to plan and you need to execute. Right now, no market movement, right? No, sorry, that's whoa. No, fuck, no. No market movement. So we don't know where we're going. So when you turn around and say, oh, I'm taking a buy, Ted, look, I'm going to go up to here. I don't know if you're going up there or not, because this is not information. This is indecision, right? You have buyers, sellers, and shit in the middle, okay? This is shit in the middle. Which way is the shit going? Is the shit going to go upstream or is shit going downstream? We don't know, and this is what you have to do as a trader. So you take your hands, so this is your hand, right? And your big thumb, because you want to use it to click the mouse all the time or whatever you're doing, and you put your butt on your hands and you sit. So this is your butt. Maybe you have a big butt, maybe you have a small butt, but you sit on your hands and wait till the shit makes a decision. You're not in the process. You're not a company. You're not an institution. You do not have shareholders to report to. You do not need to force yourself to make trades. This is the mindset that every broker, every institution wants you to be in. Of, well, I have to trade every day, I have to trade 3 sessions, I have to do this. No, 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 no. Retail trader, you need to know that you are in charge of your own destiny. If you did 1 trade today and you took a buy and you closed here, that's it, you're done. Report to your shareholder, tell your dog or cat, congratulations, you get dog food or cat food today because you made money. That's the only people you have to report to. There's not some gray-haired man sitting at a desk somewhere in some ivory tower saying, oh, well, you know, I should have held the trade a little bit longer, because if you had held the trade, you could have gotten to this point here. Who fucking cares? That's not your job. This is the institution's job to do this. Your job is to sit there like this. You know, maybe you're a woman or a man. You sit there and you say, okay, I'm in front of my computer, right? This is your computer. You got your little keyboard. You know, there's all your keys, and you got your mouse, right? So, you know, if you draw your mouse, this is your mouse. Maybe it's a live mouse, maybe it's a dead mouse. You take your hand, you click on the button, and you're like, okay, I'm done. That's what you have to get in the frame of, and that's what you have to do. You have to get out of this rhetoric that, hey, I need to catch this move down here, I need to take this move up here. If you're a swing trader, this is what you're looking for. If you're a scalper, this is what you're looking for. You're looking for a single candle in the most productive session that you are working in. Okay? Can you please plot zones on your chart now as you see them? Okay, well, I just did that. Yelling, speaking an hour, and that bitch makes the charts go wild. If you're in a trade in profits, do you suggest exiting before the news or speech? Well, once again, I would exit because I want to keep my profits. What confirmation to look if we are going up or down? Well, once again, I explained that. We don't have confirmation yet. In your opinion, what's more important? Candle patterns or zone or support and resistance that go hand in hand? Everything goes together. You have to use multiple confluences, but you have to be aware that as a candle touches your zone, so your zone and your zone, we're going to come up, tap, maybe back down and tap, or push forward. Now you can see where your candles start to hit the next price level, right? That's why you draw these lines. Once again, these lines are guides. They're guides to help you, okay? So if you look closely, all right, so if we say, okay, fine, we're looking closely. If I turn around and open up a brand new chart, okay? Here is a brand new chart, and we look very closely. There's nothing here to help me, to give me information, right? I don't know what's happening. I need to start doing stuff. I don't know what's going on. This is why you draw lines, once again, to give yourself a guide to say, okay, that probably looks like a support level. You know, maybe this is a resistance level. things of that nature. When I start to drop down into the time frames, how does that look? I start going through, okay, you know what, I need a little bit more information here. I'm looking rather quickly, a lot of consolidation, probably right here looks pretty good because we have a lot of consolidation. We tapped over here, so I know that this point over here is probably a zone. We tapped up and rejected, went down. I'm looking right here, look across, left, I can start to see information, and suddenly I'm like, okay, maybe we're gonna go back to that direction. I'm aware of over here that this wick was filled now. I'm starting to dissect the charts, and this is what I do. I don't draw on them, but these are the things that I'm looking for, and I'm observing as I start to map things out. So you saw how fast I did that. I wasn't doing this as an exact science. I wasn't turning around and saying, okay, well, this has to go, you know, I wasn't doing this. I'm giving myself a rough idea of where I believe that price is important, okay? And I'm able to dissect and say to myself that this is my line, but maybe this could be a resistance level, or maybe this could be a resistance level. It doesn't necessarily mean that it's this line, and that's what you have to start doing. You have to become fluid, okay? That's the first word, and agile. Okay, those are the words that you need to put on your computer, put them in your notepad or whatever, but you are a retail trader. You do not have the ability to move the market with a single entry, so you have to be able to understand that these are just reference points. All this information is reference points. Sorry, give me 1 second. Sorry, that was my cleaning service calling me. All right, so as I was saying, so if you're looking, these are the words that you want to be really focused on. You know, fluid meaning letting stuff move the way it is. Agile meaning, hey, we just tapped here, maybe we're going back up. I need to be aware that that's the possibility on the hour time frame, and I need to drop into shorter time frames. All right. What do you mean when you say the market is shaping up for NFP? All right, so great question. Finally, people are, oh, you guys are dialing in. This is great. Maybe I should do more webinars in the afternoon. Okay, so what we'll do is let's go back to our candles over here. Let's look at the daily. You can clearly see, once again, the market is not moving too much. You have a lot of indecision candles, right? The last few days have been indecision candles. They haven't been as strong as, say, this movement, okay? So when I say the market is setting up for NFP, it means that orders are going in based on the relevancy of what the institutions believe NFP will be. So potentially, right now, as I see it, this and this is probably going to play a key role in NFP. And why I say that is because we have multiple taps into this price zone. So if NFP is good for a currency, we're going to blow right through this level. If NFP is bad, we're going to blow through this level. So you can start to see how the currency, how they're mapping stuff out already. So institutions are dropping breadcrumbs for everybody. And when you see what's going on when they drop breadcrumbs, you can turn around and say, okay, as we start to go through, you know, Friday, it's late Thursday night into Friday morning, you can start to see how these will develop. And this is your key, and this is your understanding to say, hey, I've seen that we've tapped this price zone a lot. If NFP is good, we're going to blow past this. And that is going to create a new level for the next week. And that's where we have all the markets emptying all their pockets in terms of the orders, because now we have a clear direction, we have a new movement. There's a reason why NFP news items, that they happen on specific days and they're always the same time, right? So if you think of NFP, NFP is always the last Friday of the month or the first Friday of the month. It's timed, and if you look back and you back test, you will see that the markets are telling you exactly what they're doing when they're going to do it, because they've all placed their orders and they've timed the market according to when the news events are going to happen. So you can clearly see a lot of times the market sets itself up because it knows in 2 hours there's going to be a news event. All right.
if NFP is good for USD, won't it drop? Why would USD is getting stronger? USD JPY, if US dollar strengthens, USD JPY is going to go up. Okay? I don't think most people struggle with understanding where target zone are. The struggle is understanding what should be the trigger for entry. Well, the trigger for entry is when you are in your session. Okay, so once again, I'm talking about where you need to be for your session, because I just explained all the entries as we went through. If we went through this and we went back and we zoomed in, we can clearly see where there are potential for entries. Consolidation, consolidation, consolidation. Okay, this is where you're looking for entries. Now look at your times: 9 a.m., 8 a.m., 7 a.m., right when USA starts. Okay, this is what you need to start looking at. You need to look at your smaller time frames and looking at consolidation and not doing market entries. If you did a market entry over here, you'd be like, oh, it's going down, what am I going to do? You have to be aware of overall momentum and your timing in the market. That is where you're looking for your entries, okay? So if I was timing the market and I said we have a new 4-hour candle at 16 GMT, which is 9 a.m., and I have all this consolidation, what that means to me is every institution is putting their money in. So institution, STI, institution, CHON, right? Institution, that's every institution's putting their money in. So I'm putting my money in there as well. But I'm placing my stops here because that is below the consolidation point. And if I look left, you can see that is probably another minor resistance, minor support level. Then I'm letting it go, but I'm also planning my exit strategy at that point. Okay, so you have to look at your momentum, which was up, and then you have to look at what the market is doing based on the timing of the market. Okay, so those are how you do entries. Everyone always asks, how do I do entries? You have to sit in front of the charts, and maybe you're sitting here at 740 and you're waiting for this candle formation to start, knowing that, hey, I can probably get an entry here, but I'm putting my stop probably over here because I can see that this candle's had a little bit of consolidation. We broke up. So to be safe, I'm going to put my exit here as my stop, low lot size, so I have more room to play with, right? So I have a bigger range, and as I get better, I can increase my lot size because now I start to recognize where thresholds are as you start to look across and as you start to see what makes sense as we tap various liquidity areas in the left. And liquidity areas are here. These are liquidity areas, right? We tap, pull up, right? So the institution says, I want this price over here, I need to go get it. So we'll drive price down, we'll tap. This is your liquidity, right? So this is all your liquidity pool. That's why they call it a liquidity pool, because you take your spoon, if this is a spoon, you scoop liquidity and then you leave. That's liquidity. This is exhaustion. We tapped and rejected, okay? So you know, you have to know the difference. How do we know this is rejection? We don't know until we start seeing confirms, and this is multiple candles. You can't guess that this is rejection just with this candle. It's not going to work. You need more information. And that's where people make their mistakes. Is they'll turn around and say, we must be going down over here, right? We have one candle, must be going down. No, surprise, we're back up again. Where does that entertain? Look at where you are in the overall picture. New hour, towards the end of the hour, you start to see those pulls. You have to understand the timing of the market and the session you're working in. Once again, become an expert. This is my expertise. This session right here, this is my expertise. I have nailed this down. I know exactly what's happening because I've back tested it. I'm in the market every day at that specific time. I don't give a shit about what happened over here or over here. I care about this section. This is my bread and butter every single fucking day. That's what I'm doing. I'm going into the market every single fucking day at the same fucking time, and I'm looking either for a sell or I'm looking for a buy. That's all I'm doing. That's all I care about. I don't care about this stuff. I don't care what happens later. I care about this specific section. That's it. That's all I care about. And I don't know how many times I have to drill it into people's heads, but this trading all night doing this and this and this and up here and then all the way up over here, that is going to kill you in the long run. I tried it. It didn't work. Now I know, hey, 8 o'clock, 9 o'clock, guess what? Boom. Up, I make money. Perfect. That's all I care about. Oh, I missed the entry over here. Went up. Oh, well, it's probably going to still go further up. Why? Because we're early enough in the session. We're not over here, right? Look left. I'm over here in this part of the session early on. And that's where you're going to have your advantage with your entries. Does NFP affect the pair pound JPY? Not necessarily. Beautiful base. Can you say that all daily wicks at the top of institutions are grabbing buys to fuel NFP downwards? Not necessarily. They could be just tapping it for a possible retest and push up. We don't know yet. Clarification, thank you. We obviously don't know, just a question, right? Fuel as in liquidity, yes. Premium price. What's to say the left isn't rejection? Well, we don't know that. We have to make sure that we look at the higher time frames, right? So once again, this level over here, okay, right now we're in the 5-minute time frame. We don't know if that's rejection or not, because what do we have to do? We have to start dropping into the higher time frames, right? We have to start looking now, where are we in higher time frames? So you can clearly see we had problems in this area recently. So when I say look left recently, and you'll see, hey, maybe it is a rejection because we had consolidation and a drop, okay? Consolidation here, and then we had a drop. So maybe this is a rejection for a drop back over to here. Or maybe we're gonna pull back up over here, because if we look, this section over here, this small section, was originally liquidity over to the left. So you have to make a judgment call. But I'm not worried right now at this time, because A, at 3 o'clock, Yellen's gonna be on the mic, hammering some beats out for everybody, but more importantly, this is where I was trading. I was trading over here. Like, this is my entry over here. I'm not worried about what's going on over here. What do I care what happens here? I'm not worried about that. I'm only worried when I actually start having to look and enter the charts, when I'm looking to execute. And I will look 1 hour or 1.5 hours before I want to take a trade. This, to me, doesn't make a difference. I'll see this later. It's like here, like all this stuff here, I would have seen that later. I'll see it later. I'll look at it tonight at 7 o'clock. I'll look at all this stuff after 7 o'clock. You can play right now with yourself, not in that way, but you can play guess where the direction is, right? You can say, you know, wicks don't lie, and, you know, maybe more than likely we're going to tap a little bit further down. Where would we go? Maybe to this level here. Look, we got a little price zone. We have a little bit of a support level now built. You know, you can play that game and say, hey, did it go down? Or, hey, no, I was wrong, it went up. And that's how you can determine afterwards what your judgment skills are and if it's making sense to you and the way the markets are moving. But you can see how the market up, down, and moves in waves. And you can see consolidation regions right over here in this price region. So you know that it's important to institutions. They give you enough hints. Institutions can't lie to you. They can't say, oh, we didn't think this price point was important. They showed you over here it was important. They showed you over here it was important. Like, just look left. Institutions aren't hiding anything from you. The only mistakes that you're going to make as a trader are your own. It's not the institutions making mistakes for you. It's you not understanding what the institutions are showing you. And once you grasp what the institutions are showing you and this information, and the reason why we put our resistance level, our support level here, our resistance level here, you can see all these multiple taps, then you can start anticipating, all right, perfect, we're going to tap over here somewhere in this region over here, I don't know exactly, and then we're going to go up, probably up into this region over here again. I believe that's what we're going to do. If we break, okay, where are we going to break? Probably over here. Look, there's a whole group of people over here. We drop across. There you go. There's your target again. You have to start anticipating where you believe that we will hit targets. Maybe we're hitting them over here. And as you start to go through those levels, check off. Okay, we went to that level. Check off, next level. Check off, next level. Don't turn around and say, hey, we're up here. Well, we're going right down here. Look. Okay, we're going to get there. How do we know when we're going to get there? We don't know that. And that's the mistake that people make, is they'll turn around and say, oh, look, resistance, okay, sell, okay, well, where do I exit? I don't know. I don't know where we exit. And that is the problem. You need to know if you're taking a sell over here, my exit strategy is maybe looking at this level over here, maybe looking at this level over here. That is my exit strategy. You have to have that idea in your head. of where are we going by we're looking left. Okay. All right. If my trading plan is based on swing trading, do session time still play an important role? Not necessarily. When Ted swears, you know it's good knowledge. When he swears twice, pay attention. Yes, correct. What do you do when resistance is strong and support is strong? Um, well, you can't have strong support and strong resistance. I mean, it has to be one or the other. You know, you have to be able to understand that if you're at a strong resistance, more than likely you're going to sell with confirms, and if you're a strong support, you're going to buy with confirms. Okay. Just got in, damn it. Will this be in the vault? Yes, it will, damn it. So if price wicks isn't a major support or resistance, we can assume price is gathering liquidity. More than likely if we're in momentum. Okay. So what you can say here is an example. If we want to cheat a bit and say, okay, we're in upward momentum, bullish momentum, that we tapped this and we pulled back because institutions traded in the morning and they all woke up at 9 a.m. or 8 a.m., right? They all came in and they said, okay, time to go trade, make money. Okay, we're done. We're cashing out. And then the afternoon session starts up and they're like, oh, okay, we're going to pull the market down because we want to get that price again that these guys got in the morning. And then we're going to drive it back up. And coincidentally, surprise, surprise, that ends up in the Asian session because the Asian investors come in and say, oh, well, you guys all got this price. We want it too. And then now we're going to come and take this profit over here. If you start thinking like an institution and what they're doing and why they're doing, you can start to anticipate what's going to happen throughout the day. And there's a reason why we don't trade right now, because nothing's happening. Nobody's trading. Why are we? Institutions are doing their thing because they have to. We as retail traders just anticipate and say, hey, looks like we're building a little bit of a support level here. All right, perfect. So more than likely this afternoon we're going to go further up. I'll be taking buys over here. Sure, we'll go up to 13,120 or 112. Perfect. Or I'm taking sells over here. Great. We're going to draw past this support level, and we're going to move into this area over here. We don't know. Once again, it's NFP, but if you can visualize what the market is trying to do and where they're trying to go by looking left and looking at some key information and looking again at key information over here, you can start to say to yourself, okay, if we go one direction, what am I going to do? If we go another direction, what am I going to do? Okay. Confirms to look in the 5 or 15 minutes? Sure, that's fine. But how do you differentiate strong support and resistance from regular support and resistance? Well, you look at the higher time frames. Okay, you have to look through the higher time frames. Once again, you can clearly see on the daily time frame. Okay, look at the daily time frame. Once again, we tap this level and push down. So if we tap it again, more than likely we'll push down again, because you just look at historically where we've had the most problems with the highest time frames, because daily candles, right, in case you don't know, daily candles take 24 hours. That is a lot of market time. So if you have 5 daily candles that are tapping that level and pulling back, more than likely that is a major resistance level because you're on the daily. Even if you turn around and you look even towards the weekly and the monthly, like if we look at the weekly, look, it still matches up. The weekly time frames, you zoom in, you can clearly see we're tapping a resistance level. 2 weeks of movement, we tapped and pulled away, and now we're starting to pull back up again. You have to be able to understand that and look straight forward at the charts and make a judgment call and say, hey, we didn't break this zone yet. In, now this is the last time we broke it was in June, right? June, and now we're in September. So, you say June, July, August, September. It's taken 4 months for us to get back there again. So we're at another pivotal point to say, hey, are we going further up or are we pulling back down again? That is how you evaluate where you are with strong support and resistance. It's the taps at the highest time frames. The 2 blue lines at the top, that's your resistance zone, right? Yeah, sure, if you want to call it a resistance zone, it was just multiple resistance levels at different time frames. How do you recognize stronger support and resistance? Yeah, okay, so that means daily above the time frame are major support and resistance. Yes, they are, okay? These are things that you have to work through and you have to be very subjective with. And when you start going through and when you start looking at exactly what's happening, people need to understand where things are going. And when you understand where the market is going, you just have to be fluid and agile. That's the bottom line. Because anyone who says that, oh yes, the market is going up to here, we don't know. You don't know. And I mean, we always like to project ideas of where we think the market's going, but it's up to you to understand your risk tolerance and make judgment calls based on that. We can only make an idea based on what we believe is going to happen based on historical data. When we get to bigger lot sizes, do we get more slippage when we enter and exit? No, you don't. When price hits a daily zone, do you drop the lower time frames to see if it confirms such as a 2-2 of a trend reversal to enter? Why? We're just confirming. This question is so confusing. It's so technical. There's so much information. It's if you've hit a major level, you're pulling back the opposite way more than likely. You can't call reversals. And this is the thing. If you're going to try and call tops and bottoms, you're going to be wrong a lot of the times. And this is where you need to understand that if we're at a major support or a major resistance, we have to wait for more information. And like I said all this week with USD JPY on my Instagram chart, I said basically if we breach 113, we're heading to hills. We didn't really breach it. We came up, we tapped it, and went back. So when you look, all we've had over the last few days have just been a tapping into that zone. So this is Wednesday, Tuesday, Monday, Sunday. So you can see we really just didn't breach this. We just kept tapping it. So for me on a daily, if we zoom out a bit, you know, if you look on a daily, what does that look like to me? Consolidation, okay? So consolidation, either breaking up or we're breaking down. That's what that looks like to me, okay? Here, perfect example, consolidation, breaking down or breaking up. You know, you have consolidation here, break up, consolidation here, break up, consolidation here, break up. Same thing that's happening here. You just have to look left and see what the candles are doing, and then when it breaks up, you know, maybe you're taking buys at this point because you know this is the level where we're going when we look left. If you're taking sells, you know more than likely we're going over to this level again because looking across, you can see all that information right there. So once again, this is the idea. If we're moving up, we look left. If we're moving down, we look left. Okay, that is what you're looking at. So we're going up here or we're going down here. That is how you're managing your trades, and then you're entering in on the shorter time frames at that point. Okay? Any other questions related to what we just talked about in terms of visualizing where we're going in the markets? Let's see, do we have any questions? Oh, there they are. Pop, 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 pop. As an institution, what more information insight do they get compared to retail traders? Well, they have thousands of people working for them crunching numbers all day. Do you have thousands of people working crunching numbers all day and doing statistics and backtesting and having access to data and computers and all this other information and analyzation? No, you just have charts and you sort of go with what's available, right? So they have a lot more information. They also have a lot more money and they can move the markets the way they want to move it. And they also have inside information related to governments, and they meet with governments and lobbyists. So, you know, every little tidbit helps. Currency is an unregulated market. It's a wild, wild west. All right. Oh, no questions. Sweet. Sweet. It means, oh, more questions. So an ideal way to visualize is to wait to price hit a previous zone, and if it breaks, look left to see where we'll reach. If it bounces and rejects, look left to see where it could go ahead. Yes, correct. Do institutions fight with each other regarding where to take the market? Well, not necessarily. I mean, they just sort of, the biggest institution probably moves the market the most, but I think they all have a sentiment in where they want to go. You can see clearly on the candles, there's lots of price taps where we look for premium price and they tap it and then pull away. You can clearly see on USD JPY there was a lot of information. Could you give us a webinar with you trading live? No. What kind of shit is that? Any more of these Scooby-Doo and Buzz Lightyear patterns? Nope, no, none of those. We've done all that. No more patterns. No more Buzz Lightyear patterns. When price consolidates on a zone, how would you view that? You just answered your own question. When looking left, is it profit? Is it more like take profit confluence, right? Sure. If you want to look left and look to see where the take profit points can be, that's definitely a help. Can you explain the difference, if any, between using wick zones at the tops or using candles below price zones versus wicks at the bottom and candles, or does it matter? Well, it's not that it doesn't matter. It's just what makes sense to you visually. It's more subjective. So once again, I put a resistance level over here because I see multiple wicks being tapped, but I also consider these price zones, right? So I put it right at the edge of the candle body because what I'm saying to myself is that this necessarily is not a resistance. This is a tap for price to push back down. This is your resistance where you have most of the body of the candle. Okay, so that's sort of why I do what I do. Just it helps me with my eyes. Are you planning to trade the news? Nope. Did you go over the trade you took this morning? Yep, it's in the drive. What's premium price? Premium price is the best price for the institution, so they'll drive the market to a certain point to get the lowest price so that they get the most profit. Is price consolidation on a zone a sign of a weaker zone to you? No, it just means that there's indecision. When is the chat app launching? As soon as we can get it launching. I mean, I don't know how that's related to this webinar, but once again, interesting questions. Okay, perfect. So hopefully this gave you some more insight to things. Enjoy your day, ladies and gentlemen. Oh, there's one more couple of questions. Do you plot support and resistance based on the candle or the body of the candlestick? Well, no, I just explained why I did that. How did I get into trading? I'm not answering that in this webinar. Yeah. Would you do a Wickstone lifestyle webinar where you trade on the simulator? Well, I'm there every Saturday with him. I don't know how much more you need, and all his webinars are in the system. They're in the Google Drive. Like, I don't know why I have to do one if he's doing them all. I usually jump on with him. So tune in on Saturday mornings when he does them. All right. Yeah, you guys are a demanding bunch. Do I have kids? No. All right. Good day. Have a good night.